What's up? What's up? What's up, everyone? How you guys doing? Happy Monday to you. My name is Jeremiah Davis, aka the Funding Coach, coming to you live with Monday Fun Day, where I'm providing you funding tips on different business loan products and services. Um, it's been a rough. I don't say rough. I say there are good problems to have in running a loan brokerage company and a software company. Um, woo, I'm so busy these days I can't see straight. But it occurred to me that, and I think I've done this live before, but things change. Underwriting guidelines change. A whole lot of things change in the funding and the financial arena, and you got to keep up to date on these things. So today's topic is your business fundable or bankable? Is your business bankable? Okay. Being bankable literally means what it says, bankable, right? Going to a bank, asking for a business loan and getting approved, right? If you can do that in your business, right? A traditional bank, all right, not a non-traditional lending or alternative business funding. I'm talking about traditional funding. Okay, there are some certain protocols that you need to have in place, things in place regarding your business to become bankable, right? Business credit is only one of them. Okay, building a strong business credit profile to become bankable is only one. We often call it, you need four legs to a table. If you only got one leg, the table ain't gonna stand. Two legs or three legs, it still ain't gonna. You need all four legs to become for your business to become bankable, and that's what I'm going to talk about today. Now, we supply or furnish as a loan brokerage house 21 to 30 different loan types. Okay. I have resources for a wide range of business loan products. And that's one of the benefits of working with a loan broker, right? If you are in the funding world or if you are looking for some, resources to offer business funding to your clients, we have those resources. And the number one resource I would say a benefit of working with a loan broker is a loan broker is already established. They already have the lenders in place. They already know what the qualification requirements for a wider range of funding products. Okay. When you go direct to a lender, most lenders only work with a certain group of type of products or even one product. Okay. There are some lenders that have four or five or six different loan products, but they usually don't have more than 20. They might have 10 to 15 on, and that's rare, but having those resources, right? So you can go to a lender direct and do real estate or, accounts receivable, or factoring, or, term loans, lines of credit, things like that. Most lenders kind of stay in their wheelhouse and only get you funding for the products that they're familiar with. And here's the other side of that. Direct lenders are not usually that familiar with other loan products that do not furnish. They know their product, but they don't know all the other products. Okay. Now, working with a direct lender is beneficial because you get maximum commission for the direct lender, right? You get 100% of that commission. Now, and there's a difference between 100% commission as an ISO independent sales office with the direct lender than a referral agent. A referral agent, you're just passing the client on to another person, and then they're going to do all the work for you, and they're going to give you a referral fee commission for that referral. Okay, so you have to figure out: are you going to learn how to do all the loans yourself, and then you're going to get all the lenders for direct lenders for each of those loan products you want to furnish yourself? Okay, or you're going to work with a broker, get a smaller piece of the commission, but you be able to process more loan applications. Okay, so those are the type of things you need to distinguish between being getting into the business funding arena and working with the right people, whether you want to work with other brokers or direct lenders, and how much work you want to do. Because the person who does the most work going to get the most money. That's it. Okay. You come to Business Funding now, you sign up as an affiliate. I'm going to pay you probably 25, 35% commission, depending on the type of deal, so that you, because I'm going to be doing most of the work. Now, we're going to be splitting a lot of the shares. You're going to manage your client. I'm going to manage the deal. Okay. Or my staff, rather, is going to manage the deal. So it's vitally important that you're able to figure out what you want to do. Okay. So those are benefits of working with a broker versus working with direct lenders. They're both beneficial. It just depends on what your comfort zone is in doing these type of deals. Okay. But also, I want to really convey that when you're doing a business funding deal, pre-qualifying your client before you submit an application. There's nothing worse than submitting applications to lenders and then all the lenders decline the application. Okay. And you don't know why. Okay. They just say it doesn't meet our criteria. Now, every lender has their own criteria that they establish for themselves, basically saying, this is the type of client we do want to work with. This is the type of client we don't want to work with. Okay. And that varies greatly per lender. What some lenders say, if you haven't been in business for 2 years and making $50,000 a month, we don't want you. So any client that you have that makes less than $50,000 a month, and say less than 2 years in business, that lender is going to automatically decline. So you need to know that type of stuff. Okay. Other lenders say, okay, as long as you're making $10,000 a month and you've been in business for 3 months. Okay. Now, being bankable and being fundable are two different things, right? And let me break it down for you real quick. Being fundable, most businesses that are making some type of money, I would say at least 5,000, better $10,000 a month, making $10,000 a month, can get some type of funding, whether they have good credit or not. Okay, because that was what we call asset-based funding or revenue-based funding, where the revenue of the business is what the loan is based on. Right now, obviously, if the owner has better credit, they get better terms. Okay, but they don't have to all the same restrictions, and they can provide less supporting documents. Okay, so and the reason I say that is I want to preference that every business doesn't mean you're going to get a business loan. I have people that they're making $200,000 or $300,000 a year, but during say the last 3 months, how much money did they make? Right. So I have a whole bunch of files on my desk right now of clients that make over $300,000 a year, but during November, December, and January, they make less than $10,000 a month. So they're not going to get qualified for a revenue-based loan. Now, if they got a 680 minimum, 700 plus credit score, there are other funding options that I can provide them, and which I try to do. Okay. But if the client has bad credit and no money, business revenue, there are no loan options. Okay. There are no loan options for people with bad credit and no business revenue. A business loan, as is stated in the title, the business needs to make some money to be able to afford the loan. If the business is not making any money, then they can't pay the loan back. So a lender will not approve a business that does not make any money. Simple, right? So if that client does have the 680, 700 credit score, then there's other funding products that we can get them into if they meet all the criteria. Having a high credit score doesn't mean it is not all there is to it. I'm going somewhere. We're talking about becoming bankable, right? Is your business bankable? So if you say you got a 750 credit score, right, and you have no derogatories, you got at least 3, 4, 5 trade lines with 1,000 or higher limit, 2,500, 5,000 is better. Okay. We can do some other funding options for you based on, and you make more than $50,000 a year, right? Say you got your day job and you make, say, $75,000 in your day job. You're trying to start your business, but your business is not making only $2,000 or $3,000 a month. So we're not going to use your business. We'll use the business name, the business structure to apply for some other business funding that's reliant on your personal credit and your personal or your W-2 income. That scenario. This is the benefits of working with a loan broker is they know these things in advance. They know what the scenario is for the different loan products that you can basically carry on and tell your clients that, okay, this is what we can do, this is what we can't do. Okay, so that's one thing. All right, so what does it take to become bankable? All right, become bankable means you've been in business for 2 years. Okay, there are some lenders that will take you for only 1 year in business, but a minimum of 1 year in business. All right, business tax returns, preferably 2 years of business tax returns. All right, that means tax returns, your financials, P&Ls, balance sheets, things like that. P&Ls, profit and loss statement. Okay, um, one aspect, right? So that's part of being bankable. Personal credit, having the best personal credit file is part of being bankable. Having good business credit score. Now, let y'all know about business credit. Business credit does not equal business funding. Okay, having a strong business credit profile, meaning comparable credit, having comparable credit. If you don't know what comparable credit is, go back and watch one of the previous videos on comparable credit. Okay, comparable credit basically means I have established in vendor accounts, credit cards, lines of credit, things of that nature in my business name equal to the amount that I want to borrow on a business term loan, right? If I want to borrow $100,000 in business funding with the low interest rate and monthly payments, I need to have comparable credit equal to $100,000. Okay, comparable credit is one thing. Another thing, okay, so we got personal credit, we got business credit, business finances, right? Your personal credit, you need to have your personal taxes in order as well. The bank is just trying to mitigate risk. They want to check off as many of the risk factors as possible so they can qualify you for the loan. They want to give you the money. They want to loan you the money. That's how they make money, by loaning money. Okay, but you have to meet the criteria. All right, so having good personal credit, have a good, strong personal credit profile, having a good, strong business credit and a business credit profile, and having your financial documents in order. Okay. Now the fourth thing is cash. All right. Most business, so this is to become bankable, you need these four things, right? Your business should be making at least $35,000 a month or more, and you have a daily average balance of $10,000 or more for 90 consecutive days, right? Now, if you go under, here and there, but majority of the time, your daily average balance is $10,000 or more for the last 90 days means you would have a low 5 bank rating score. A low 5 bank rating score is the minimum score for a bank rating score you need to get these quality type loans. And that tells the lenders that you have the resources to service the debt. You can afford this loan and make the payments. All right. Now, if you make $100,000 a month, but every dollar that goes in goes right back out, and your daily average balance is, say, less than $10,000, say $7,000, $8,000. I've seen people that make $100,000 and their daily average balance is less than $1,000 because every dollar that comes in goes right back out. So they have a low 3, or there's a low 3, mid 3, and a high 3, and 3, 4, and 5. Okay. If you're in the 3 or the 4, you're denied. You're not bankable. You're not bankable if you have a 3 or 4 bank rating score, low, medium, high, right? The minimum low is the low, right? And then the medium, and then the high. Right? If you're making over $100,000 a month, your daily average balance in your business checking account is over $100,000 a month. You're in a low 6. You are bankable. That's what I'm talking about. So just to recap, I'm gonna keep this short because I got a lot of work to do. have a strong personal credit profile, right? 700 plus credit score, no derogatories, all your trade lines under 40% utilization, the lower the better, 30, 35% is good, okay? Long as it's under 40%. No more than 4 inquiries on your personal credit in the last 6 months, okay? And at least 3 to 4 or 5 trade lines, and at least a couple of those with a 2,500 or higher $5,000 limit on each of those trade lines that are under 40% utilization. Okay, that's one. That's your personal, right? Having your personal tax returns, or if you file separate tax returns, having your personal tax returns set documents ready and current, not owe any money to the IRS, and or have a payment plan in place. That's just the first leg on the personal side. On the business credit side, you want to focus on the SBSS score, right? This is the score that the SBA uses and lenders use. They're not checking DNB or Equifax or Experian or Credit Safe. They're checking your SBSS score, and you need a minimum of a 150. How they calculate the SBSS score is a combination of your business credit score of an 870 or higher, 80 be ideal, 100 is perfect, okay, and your personal credit of 700 or higher. All right, when those numbers combine, that means you have at least a 150 or higher SBS score. Okay, that's what we're talking about. Okay, all right, and having the comparable credit. Right now, you need at least 10 trade lines, 10 to 15 trade lines that you've made consecutive purchases and payments on time, right? At least 10 days before their due should be paid. Okay, this is going to increase your fundability and your bankability. Okay, so and having those 10 to 15 trade lines, right, with larger limits. You want $3, $4, $5,000, at least $5,000, one trade line, at least $5,000 limit. Okay, on your business credit profile. Okay, under the 40% utilization. Can't be overutilized because then your DTI is out of whack. Right? If you don't have your DTI on your personal and your business under control, you're going to get denied. Okay? So personal credit and credit file, business credit and credit file, right? Trade lines. Now, your comparable credit is a combination of your vendor accounts, credit cards, and lines of credit in the business name, right? Having a variety of those type of lines of credit, credit cards and vendor accounts collectively go towards count towards your comparable credit. Okay, so if you don't have at least $50,000 to $100,000 in comparable credit, you're not going to be able to get $50,000 to $100,000 business term loan line of credit or so have. You need to have all the pieces to the puzzle, okay, to be bankable. So you got personal credit, business credit, right, and then you have comparable credit. Now, the fourth thing is your bank rating, your bank account, your daily average balance, right? If you use your vendor accounts, credit cards, and purchase all the products and services that you need to sell, right, and leave the operating capital in the bank account for as long as possible, this is increasing your bank rating score. It also will increase your limits on those vendor accounts and those credit cards. The more you use them responsibly and pay them off, then you can access that. We also show you how to get a secure CD that reports as a business line of credit, right, on your business to start building your comparable credit. And you can get that secure. It's like a secure credit card, but it's a line of credit in your business name. These are the things you want to look out for. This is the stuff that you need to be bankable. In our software, we got this all mapped out for you with all the resources, all the vendors, all the lenders, even the banks and credit unions that offer business CDs that convert into or report as a business line of credit. So we show you how to build a comparable credit. We give you the resources to get the vendor accounts that you need for your business. We give you the education to use those accounts responsibly and pay them off on time to increase your comparable credit. All right, having all your financial docs, business and personal, in order, right, and then having that low 5 bank rating score. Okay, so and when you're using those vendor accounts, those credit cards, and you're leaving the money your operating capital in the bank account for long as possible, you're hitting multiple birds with one stone, sort of to speak. You're increasing your comparable credit, you're increasing your bank rating score, and then you can get the other pieces as well. So that's what the lenders want to see. All right. Also, it shows lenders that other financial institutions, vendors that extends lines of credit and revolving lines of net 30 and net 60 and net 90 and net 120, all those things. That's what we're trying to do. You're trying to get a lender to look at you and say, he's got his business is serious and he's fundable, he's bankable. And that's what it means to be bankable. Okay. If you are not bankable, you're going to live in an alternative funding space, the MCA, the working capital, revenue based, asset based funding, accounts receivable, equipment, any type of factoring, accounts receivable, inventory, things of that nature. So it's ideal for you to get all those things in order before you apply for those premium loan products. At Business Funding Now, we do that. We show you how to do that, map it out for you. If you're interested in getting the Black Label CRM, White Label Business Credit and Business Funding software, all those tools are in there. All those tools are in there so you can help your clients become bankable. Okay? So, question is your business bankable? If not, what do you need to do to get your business bankable? Those are the 4 legs to the table of becoming bankable. All right? That's what I'm going to leave you with today. And I'm going to catch you on Friday with some more from Black Label CRM. Listen, like, follow, share, all the above. Facebook, YouTube, Instagram, TikTok, Clubhouse, where, not Clubhouse, but TikTok and Instagram, Twitter, all those. Okay. And I hope this was helpful to you guys. And listen, it's the beginning of 2024. You can make 2024 one of the best years for your business, whether you're helping other people get loans, getting loans for yourself, or you need to get a software to help you provide these services to your clients. My name is Jeremiah Davis. I'm the Funding Coach. Peace.